stock movements. A lot has been said and done about on public sector banks, how they have underperformed over the last few years. But a study of over 60 PSU stocks show that government companies involved in other businesses too have not really done well. Yatin Mota has compared the performance of all of these companies over the last 5 years and is here with the details. Yatin, will you surprise us?
Well, if you look at the performance, of course, banking has been a clear loser as far as the entire PSU bank is space is concerned. But we were looking at nearly 60 PSU stocks in which we were looking at the data points. Of course, we have not considered a lot of companies like Hindustan Zinc, wherein there is government holding, but they are still controlled by private entrepreneurs. Now, if you look at the total PSU stocks, nearly 25 PSU stocks have given a negative return over a period of 5 years on a compounded annual growth rate basis. And also we have the 14 PSU stocks which have given single-digit returns on a CAGR basis in the last 5 years. So clearly, when it comes to the PSU pack, the performance has been quite dismal. In fact, if you look at the top 5 PSU companies by market capitalization, of course, we have the likes of ONGC, SBI, Coal India, NTPC, which have given negative returns, and clearly, if you look at SBI, that is the only banking stock wherein the stock price performance has been slightly better than other PSU banking stocks, wherein the returns have been 4%. IOC, of course, because of the diesel and petrol price deregulation and the kind of cycle that we were into, has given and managed to give a return of nearly 20% on an annual basis for the last 5 years. And if you look at the other PSU stocks, clearly the performance has been not very great. In fact, you look at ONGC as well as Coal India, largest energy companies in India, the returns is negative over a 5-year CAGR period. So clearly, the performance is quite weak on a 5-year CAGR basis and nothing really done on the revenue front as well. Moving forward, as you look at other companies wherein we have seen a very good performance, we have the likes of ITI, NBCC, and look at these companies, BML, BL. These are the two defense companies wherein we have seen a good order flow and also, more importantly, a good return coming in over a period of last 5 years. BPCL also. So oil marketing companies in general have done really very well. So if you look at BEML, the return has been almost 50%. So the CAGR has been 50% for the last 5 years. So very good going as far as stocks like BEML, NBCC is concerned. Investors have really made money. But not really working in the PSU packs, and we have not analyzed the banks here. Remember, we have discarded the banks because we already had done something on banking stocks. So ex-banking, we have the likes of MMTC, MTNL, HMT, Hindustan Copper, all of these stocks, really struggling to generate returns. In fact, these are the top 5 losers as far as market returns are concerned. And even if you look at the revenue growth for MMTC, the revenue has declined by nearly 30% CAGR in the last 5 years. If you look at HMT, Hindustan Machine Tools, the revenue decline has been at a pace of 14% annually. So clearly, when it comes to the revenue growth and the share price performance, it has been quite dismal for all of these stocks. And of course, we have looked at some bit of turnaround is happening in stocks like ITI, HMT, wherein the government will be infusing funds, but that also not really helping the performance if you look at it from a 5-year CAGR basis.
Well, I guess, Yatin, this simply tells one thing, that no matter what the news flow might be, don't go out and invest big bucks into PSU names unless you research them properly, because they don't really make money for investors.
Clearly, Neeraj, and if you remove the oil marketing companies, from the PSU pack or probably defense companies, the performance has been dismal. Remember, the Nifty CAGR for the same 5-year period, the CAGR has been 14.5%, 14-15%. But if you look at the top 5 PSUs by market capitalization, it's not even double digits. So, that is the kind of underperformance that we have seen over a very decent 5-year period that we have tried to analyze. So clearly, it has been quite weak. And look at this, 25 PSU stocks, 5-year CAGR has been negative. So every year you have been losing money for the continuous period of 5 years, and that is quite big.
Yeah, it is. It is very, very big, and it's a very interesting analysis. Don't just blame the PSU banking names. It's happening across the spectrum. Yatin, thanks so much for putting this into perspective. Very interesting data out there.